everyone, it's James and Louise again from the Property Education Company. Now, today is quite a massive topic that we want to discuss, and we want to keep it quite simple and break it down a little just to assist people who ask us constantly about this particular topic when it comes to lending. And today's real topic is how do I get the most competitive interest rate? Now, Louise, as you know, massive conversation, massive topic. And we could talk for days about certain loans and particular things about your credit score and all sorts of aspects when it comes to lending. But let's start with the basics. How do we find, let's say, the most competitive interest rate for our particular clients that suit their needs?
Okay, so it's first up that you hit on the nail on the hammer, really. It's their needs, it's what suits their circumstances, because what is cheap to one person's circumstances might not be cheap to another as such. So we're always looking for the most suitable loan for you that suits your needs. And of course, we want to make that interest rate as low as possible. So we assess over 40 different lenders to help make sure that your needs are met under the most competitive rate we can get for you, or the most competitive rate that we can find that meets your needs. And it might not be the lowest rate available totally, because that, whatever that is, the circumstances of that might not suit you.
Right. So you said we assess over 40 different lenders. Now, that's a huge amount of lenders for us, and I know our panel. Now, can you just break down why we look at so many different lenders and touch on the same point? Like, say as a product for a first home buyer may not be suitable for someone who's also an investor. Can you explain that a little bit more?
Great, James. Well, the question is, are we comparing first home buyers and investors? It's a completely different loan scenario. So they are offered different things. And an investor might want an offset account, or it might want it linked to their current owner-occupied property. That can sometimes give us a scenario where we can get both loans on a lower rate, compared with a first home buyer who might want to avoid all fees. We can get loans with no fees at all, or if they want an offset account, there will be some fees usually. So it really depends on the client and what their requirements are.
So do you think we could get the same interest rate for, say, an owner-occupied property versus an investment property, or is that just out of the question?
No, it is possible actually, but it has to be linked usually to get an investment rate. For an investment property purchase at an owner-occupied rate, they usually have to be linked with an owner-occupied loan. So
Right.
that's rare, but there are circumstances where that can happen. But generally, if you're doing an investment loan separately, they are more expensive now.
So now, say, for example, I'm looking to get my first home. As we know, we help a lot of our first home buyers here. And I'm looking in the market and I want to hear, like, I see that there's some fixed rates for really cheap at the moment versus for a variable rate that's a little bit more expensive in the low sixes. Well, I've seen some fixed rates for the low fives. How do I decide which one is the one I need? Or can I get both?
Yes, well, that's a great point, actually. You can get both. You can use a split loan. So that's a loan where you'll fix some of the loan and then have a portion variable. So why would you do that? Because we're anticipating, and everyone's been talking about interest rates potentially going down this year, and they anticipate them going down as much as 1% over the next 12 months. Now, whether this happens or when it happens, I don't know. However, if you're thinking, oh, well, if rates are going to go down and I'm going to fix a rate, and most of the fixed rates are offered over 2 years, I might be losing in the second year. Even if my rate is lower now, it might not be within 12 months. So it sort of puts you in a rock and a hard place. Do I want to fix so I get some security around my repayment and a slightly lower rate now, or do I risk it and go with a full variable now? The option might be to use half and half and split the loan.
Right. Okay. So, Louise, we've touched on a handful of options as far as getting interest lower. What's the one thing you reckon you should do as a person who's looking to get a loan? What's the one thing you should look at doing?
Come and speak to us, of course.
And why is that?
No, speak to your mortgage broker, because mortgage brokers have all this available to them. And that's our job. We're full-time and we've got a whole team in the back looking at rates and offers all the time, different policies, different offerings. So lenders will have policies that suit your income particularly, or lenders might have policies that assess your self-employed income a certain way that is particularly generous. They might ignore owners' corporate fees for some of them instead of making it an extra fee. So those lenders are attractive for people who are buying apartments as such. So there's all sorts of different policies that can affect who you apply for. And you won't know if you just go see the one bank and they go, oh no, this is what you can get and this is all you can get. Whereas we have this total range of options for you, and we can help you protect yourself from getting the wrong advice and a better offering for you.
So, guys, as you can see, there's a massive amount of information out there. And this is why we recommend you see your mortgage broker about discussing how to get your most competitive interest rate. There is going to be some products that are most suitable for you, other products that will be completely inappropriate. And there are so many lenders out there with so many different interest rates, it really can be quite confusing. So, my recommendation really at the end of the day is don't go hunting around yourself. It's a lot of time and a lot of energy that we can do on your behalf for you to find you the most suitable product for you, okay? And have a discussion about your needs and your requirements for your lending purposes.
And James, on that, it's also really good to think about fees that are charged that you might not want to pay fees, or fees that add up ongoing. Now, they can work great if you're an investor with 5 or different loans, but not so great if you're just the first home buyer getting one property.
So there are all many nuances. There's so many nuances, I should say, to when it comes to lending. So it's always best to ask your broker. Now,
and we always apply for most competitive discount we can. And if you hear about a better discount, tell us, and we can always go back and apply for you as well.
that's again a whole nother aspect when it comes to interest rates and lending. Now, I really hope today you found this to be quite helpful. I know it's a big topic, so if you do have any questions, please feel free to reach out to either myself and Louise and the team, and we can help you discuss what your needs, discuss what may be suitable for you, and hopefully find you the loan that is most suitable. We'll see you next week. Bye.
Bye.